We're
Oh,
live. We are live. Okay.
Okay.
Hold up. This is on. Shoot.
Ay,
Okay.
caramba. Let
So
me see
this
that.
is
Oh, no,
okay.
you got that.
What the? All right. Let's recap. So I'm gonna go off 4 hour what we have right down here. First thing that we have.
Go.
Who is talking?
shut up.
4 hour
Log in,
for
Mantas.
value gap. It's all good. I'm locking in. 4 hour for value gap. The second we start pushing lower, you can see that this is respected. The
Hold on.
bodies are respecting it. This is exactly what we want to see. When the bodies are respecting it, I got it. So when the bodies are respecting it, this more than likely means we're going to be bullish. We like the respect, and we're barely forming any order blocks. This is giving us clear confirmation price wants to run higher. So hopping on the 15-minute, we have this beautiful specimen, a power of 3. I'm going to delete this because we don't need this. But we have this low being formed right here. I'll show you what... Hold up, sorry about that. We have this prior New York session... Oops. No. Okay, prior New York session... I guess you could call this previous day low right here that we ran out. This is our manipulation into the 4 hour for value gap, and ever since then we have this market structure shift right here, and we have distribution higher. So this is more of a market maker buy model plus power of 3, which is really good for a trade. This was extremely high probability, but look at the time. This was at basically midnight all the way throughout London, so we weren't able to trade it. But what we did have, when price reaches the epitomis of, or whatever people want to call it, of a market maker buy or sell model, we basically have an extremely volatile run up higher to our final target. And in my opinion, our final target was this 4th standard deviation right here. So we have this massive violent run up after, I'm not going to actually talk about this, we don't need that. We had this violent, fast, displaced run up higher at the end of our, or at the height of our curve of the market maker buy model. Sorry, people just keep calling me. But basically, we run in, tap our 4th standard deviation, start running lower from that. So, I mean, I didn't take any trades today. I was actually actively looking for trades for a change. I wasn't really able to spot any. I mean, we obviously had, after the 4th standard deviation, we could have looked for a trade. And the only thing I noticed in particular was this breakaway gap being formed and then us running lower off of it. I wanted to see a breakaway gap form, but I mean, 4th standard deviation get tapped into, we would have wanted to see a more thorough shift in market structure. And we could have been looking at our mitigation block right here. We retraced into it, went lower off that. But overall, I was feeling kind of iffy about today's price section. We could look at the 10-minute and, hold up. I mean, let's look for the silver bullet real quick. That's something I gotta go over. We gotta look for the silver bullet. Give me 1 second. Alright, we're fine. Okay, I'm still good. I thought someone was trying to break in. So, mitigation block, we retrace into it, we push lower off of that. Right here, you could see that this is kind of, what was it? I'd say this is more of a retrace after hitting our target, because this is our original accumulation right here. If you want to call it that, it's more money reversal. I guess you could call this a repricing above, or at least a run above, which caused a displacement. And you could draw OTE from this high and this low, because I would usually want to see a retrace into at least a discount if we want to push up higher, and that's what we got. So as you can see right here, lower, push up higher, retrace, run up higher, and on the hourly time frame, you can see how weird this stuff looks with the wicks, the down close candles, everything basically coming together. Okay, what else do I have to talk about? I'm just gonna go over the silver bullets real quick. I don't really think this is gonna be a too educational recap. So we have 10 and we have the 11. What is going on, man? Okay, so what? Okay, so entering the silver bullet time, obviously my eyes would be on this fair value gap because this is more of a mitigation block right here that lines up with it. And as long as it's inside of the discount of a range right here, I'd be fine with taking it. Well, that's not really too good. I sometimes draw it from this low to this high, but I typically recommend this one. But you could also get away with using this swing, what was it, this swing lower right here. But since this is on the 1 minute, I typically want to be using something more like this. So let's see what else we have on the 1 minute, because we have this BPR right here. So we tapped into that, but usually if we're just looking for the silver bullet strictly, this fits our criteria. So entering the silver bullet time, we have these fair value gaps right here, but we've already filled them. We've already reacted off of them. We're going to be pushing lower. We're already pushing up higher. If you look at the higher time frame, we're just retracing, what was it? Retracing after and failing to run out this high right here. So, I mean, hold up. I also wanted, I remember earlier today I was thinking that this mitigation block would hold, but once we saw it run through, I really weren't bearish. If we were going to be bearish, this mitigation block plus volume imbalance would have caused a greater reaction than us just running through. We filled this fair value gap entirely during our 10 a.m., so we would have to look for a different trade. And hold up. So basically, all I can really say, retrace to this fair value gap, another mitigation block, a high probability one actually. I like to use the wicks mostly, but for this one, we could call it an order block, change it to delivery, whatever you guys want to call it. I'm going to call it mitigation because it fits the profile, and I'm going to use the body. So order block or mitigation block, either one. This is a high probability area basically, and we have the discount. Everything lines up for a good long right here. I think all of you guys know this. So we would have long right here. Stop loss placement. I mean, down close candle. Mean threshold. I probably would have gone mean threshold of the order block, which that might have stopped me out. That probably would have stopped me out realistically if I was to take shorts off this. Yeah, I might have gone stopped out. Because if you're using the, what was it, like the rule-based one, where I just say 15 handle stop loss, you would have been fine. But I'd like to go a little bit below mean threshold of an order block, which this one right here, that would have been entirely my bad, unless I would have gone a little bit wider. But typically if I sell this, I like to keep my stop loss 7 handles, so I more than likely would have gone stopped out if I took this. But if you're more like, or if you're like 10 handle, 13 handle stop losses, then you're good. But that's really small. And then you could target the unfinished business of our 4th standard deviation. That's the first one right there. I wasn't really able to see it. The last thing I was able to call out was just wanting to see this what happens with this mitigation block. And it wasn't respected. So what are we going to do after that? After shifting market structure, changing state of delivery right here. I mean, finish the business right up here. Inside of our, I'll show you real quick. God, it's so hot in my room. Hourly fair value gap, where we ran out this high right here. So because of this buy model, this is an hourly fair value gap. This is a 4-hour fair value gap. I would want to see overall order flow, especially with this higher time frame buy model right here, be respected, and this just to be a cause of retracement into at least a discount. So once we hit our discount, the best thing to do is just to continue looking for longs. Why is it so hot in my room? I can't focus. I'm sorry. Shoot, man. Okay, and then someone else was talking about the PM silver bullet. Hold up, I gotta open my Discord, see if we have any questions. We have 2 notifications in trading floor. Okay. Yeah, you can, I'm in a recap right now. You can speak in a second. Let me finish this up and you're good. You have malt. Really? Okay. Let's go over the PM silver bullet. I don't remember. I should recap. That's crazy. Thank you, Savvy. Okay. Let's find the PM. So first PM silver bullet right here. Boom. Let's look for our times. Boom, boom. Yeah, I most definitely would have gotten stopped out looking at this. Of course you have this one right here. What is our bias? I was bullish. I wasn't really able to see this. I was getting a haircut, which is a different cut. But realistically, if I'm bullish, we push lower. Even after shifting market structure, I would have wanted to see at least a retrace into discount. So if I was going to take this trade, it most definitely would have been a loss on my part. So of course you have this big hourly fair value gap, but I'm going to call this more of a volume imbalance that I want to see get filled. And you can see that we did that right here. But if I was going to be looking for a silver bullet long, this is what I most realistically would have done. I would have considered this as a shift in market structure. For this fair value gap, this has to, I'd be like, this has to be the silver bullet. Unless you have some clear 5-minute fair value gap. Then we could have had down here, which if I was bullish, we could have taken it right here. Which I think this might be what the guy's talking about. This would have been actually a way better long, but if you're stuck on the 1-minute time frame, not looking at higher time frame, which as you can see, body's respected this perfectly retraced. Either way, if I took it right here, I would have gone stop. I would have thought this fair value gap. This one right here, if I was looking at the higher time frame, this one makes so much more sense because okay, I gotta get rid of these lines. This looks horrendous. I gotta clean up my charts a bit so you guys can understand. I want to try teaching with a comprehensive input too, because that's how most people learn languages fast. So if I'm able to teach you guys how to trade fast, oh, it's game changing. Okay, so overall, you guys know I want to see a massive retrace into discount. So after retracing into discount, we push up higher. I think we retrace into a discount of this overall range one more time with that little run into the fair value gap. But if it, I mean, no, I go over it. If I want people to be profitable with this one model for now, if you haven't taken a payout, I want you guys to focus on the silver bullet. But if you're able to see the 5-minute fair value gap into the time or audience of this one, yeah, this one most likely would have been the best one. We could pair it with premium discount or OTE and look for it that way, but overall I probably would have longed off the 2-5 quadrant and gotten stopped out after moving a stop to break even. That's most realistically what would have happened with me. So if I were to, this is all hypothetical. I guess I'm just tape reading at this point, because I don't really think I would have done most of this other than just 5-minute fair value gap. I don't know where, bro. We have a ton of people in here. What do you mean? Okay. Well, so let's see how much people we have. I can't see how much people we have on the stream. But the first quadrant I probably would have taken a trade off of and stop loss outside of the fair value gap, depending on how much handles it is. It would have been this one, and yeah, we could have gotten away with it. I probably would have been able to hold on to it. 8 handles isn't too bad. Probably targeting out this high right here. Oops, that's the wrong one. More than likely targeting out this high, or if I wanted, what time is this? 2. Okay, realistically, I would have thrown down a standard deviation, target our first one. That wouldn't have worked. Yeah, I don't really see any take profit. I probably would have just not taken this trade, if I'm being completely honest. Or I would have closed a break even. Of course, this high would be a target, but without that in mind, after seeing it accumulate like this is most definitely where I closed it. Stopped to break even after accumulating. I would have gotten stopped out if I took this. But if anyone held that, or if they were to take that and hold it, you would have been up. Which, we're pretty bullish, but when it gets to conditions like this, I probably wouldn't have done anything. I would have been still. Which, that's what I've been doing. I don't know why I haven't traded this week. I have my 100k funded, I have 3 of them. I still haven't taken a single trade yet. I just haven't seen anything I like. I like more higher probability. I was looking at SMTs today too. I was watching everything. I was genuinely ready to take a trade. Primed, but no setup came, so no trade. I think that's about it though. Yeah, just be patient. Yeah, 100k evals. I gotta finish my business with them. You're on a challenge with one? Okay. I wanna get multiple fundeds again. Patient. Exactly, be patient. I wish I could go on a psychology rant right now, but I can't think straight. My head hurts. I didn't get much sleep. Bro, I don't know what happened. After it, I felt sick. I don't think I was productive enough. I could not sleep last night. It was horrible.